A very good afternoon to people in India. Uh, on another wonderful Sunday, we are back with another fresh episode of our Hello Kolkata podcast, Kolkata Calling Podcast Series. Today is our 27th episode, and we have a very special guest. Like every Sunday, we have a very special guest with us today. Um, before I introduce my guest, and this is going to be an interesting session for many reasons, but I'll get into that. Before I get into introducing our guest and bringing him on to the main stage, quick overview of what's happening in Kolkata Calling. The past week, we had some fantastic announcements. Uh, we had more news about the Infosys campus coming up. We are still awaiting the final confirmation on the date of the start. We also shared news about Titagar. We also shared news about specialty restaurants, which has plans for expansion. We shared some news around the real estate market boom in Calcutta. All of that stuff is happening. All good stuff. If you haven't followed those news items from our page in the past week, do not worry. You can always go and check those out in our LinkedIn page if you're listening to live on that page anyway. Otherwise, our very own Moinak will be sharing a newsletter every Sunday, like every Sunday, and you will have all the summaries of all the news items that we published in the past week. Along with that, we have three new sections. We have the talent spotlight. So if you want to be featured in the talent spotlight, if you're looking for opportunities in Kolkata, we would love to showcase your profile to potential recruiters and HR who follow our page, so we can share your profile through Talent Spotlight. Then there's a job spotlight. You can also look at the jobs that have come to our attention thanks to our wonderful community members who keep on tagging us, keep on sharing those jobs with us. So you can follow the job spotlight. And the third section, which we introduced a couple of weeks ago, is the startup spotlight. We draw attention to some very amazing innovative startups in Kolkata who are doing wonderful work, and we would want to give them the shout out that they very much deserve. So please follow the newsletter to subscribe to it. We are, I think, 14,000 newsletter subscribers. We recently hit 27,000 community members on LinkedIn. So thank you everybody who supported us on this journey. Uh, Sky's the limit. We're just getting started. And on YouTube, our following is still small, but we hit a small milestone of 200 subscribers. So again, thank you to everybody who watches our podcast, follows our content, and uh, we do it out of love for the city, and that is what keeps us going. So you keep giving us your love and support, and that is more than enough encouragement for us to do what we do. So from our side, from Moinak and me, very a lot of gratitude and thank you to everybody who follows our page and supports us. So with that out of the way, today is a very special day. Today is Rath Yatra, so an auspicious day. So happy Rath Yatra to everybody who follows. Now, let's get into our podcast and our guest. Now, I don't need to refer to any notes to introduce my guest today because we've known each other for a very long time, 14 years to be precise. And I'll talk a little about how we know each other as well. Uh, my friend, who I'm going to introduce, went viral recently. But there might be a feeling that, oh, just because somebody goes viral, that's why we invite them to Kolkata Calling's podcast. That's not really the case. If I go back and talk about another previous episode with another friend of mine called Pranshu, who decided to become a stay-at-home dad after working in corporate for 12 years, the moment I got to know about his move, I reached out to him saying that, hey, this is a wonderful story. We'd love to, have you on podcast. And then he went viral through a LinkedIn post. And then when my friend started doing his stuff, which I'll talk about, I also reached out to him saying, hey, you should come and share your story on our podcast. And then he went viral. So there is a trend here, right? So if you want to go viral, probably let me ask you to come and join our podcast. But uh, jokes aside, this will be a very serious podcast because we're going to talk about very important things that affect each and every individual, right? Financial management, wealth management, financial independence, things that we are never taught in school. And today, unfortunately or fortunately, we have too many influencers teaching us how to be financially prudent. Some of them are absolute garbage, and some of them are gems in the rough. So we have a gem like that today. So without further ado, let me introduce my dear friend Sourav Dutta. Sourav Dutta is an investor and trader, now full time. A couple of years ago, he retired from his corporate job. He was in corporate HR working in multiple organizations, notable organizations like Coca Cola, Amazon, Microland, GSK. And after 10, 11 years of working in corporate, he decided to call it quits and focus on investing and trading full time. We'll understand how that journey and how such a brave move to quit and retire from corporate at 34. So we'll ask Datta about that. And then he started sharing his views, his opinion, his wisdom on Twitter, X, as well as on YouTube. And he's got a lovely channel. You can follow the Twitter link here as well as the YouTube channel link here. Please do subscribe to his channel and his handle. He went viral for right reasons or wrong. We'll discuss that. And he's enjoying that bit of spotlight. I don't know personally how he's reacting and responding to it, but it did go viral because of his views, which we'll talk about classification of people in wealth categories based on their liquid network, which became a very very hot and contentious topic. So we'll dive into Datta's view on why he made that tweet, what was the justification and reason behind it, and allow him to explain that as well. And for other viewers who are listening outside the virality part of it, because that's where the bulk of the content and uh, important advice that Datta can share with all of us is around financial management, financial independence, which he has achieved, and we are all on the journey to do that. So without further ado, let me bring in Saurav Datta onto the stage. Uh, Saurav, welcome
Hello,
to
hello,
Hello.
hello, Subed. Hi, good to catch up.
Wonderful. So the reason I must say that we are doing this podcast at 12 p.m. India time is because Saurav Datta is living a very relaxed, retired life in Netherlands, Holland, in the city of Eindhoven, which is behind in time zone. So we didn't want to wake him up too early for this podcast. But Saurav, thank you so much for kindly agreeing to join us on Sunday. So we'll talk about a lot of stuff today, but before we go into the heavy duty stuff, uh, share with our viewers a little bit about your journey, early days. You're a Kolkata boy, you know, born and brought up in Kolkata. Share a little bit about that journey, education, early career. How was that journey like?
Yeah, yeah. All right. Before I start, Subed, a quick check. My mic,
Absolutely
etc. All
perfect.
of that is fine.
Absolutely perfect. You're freezing up a bit.
Subed, for the kind introduction. I think you have been too introduction of me. So I'll possibly start with my background. Yes, a very proud Kolkata boy. Have been born and brought up in Kolkata. Started off with my schooling and from IEM, from
Saurav,
IEM Kolkata.
Saurav,
Yes.
I think you are breaking up a little bit for our audience on the live stream.
Is it
Um,
better now?
it's better now. Let's go.
Okay, let's go. So, I am, of course, a Kolkata boy, as you described, born and brought up for a large part of my life in Kolkata. Did my schooling here, my engineering. I am a computer science engineer, and then went on to do my MBA from XLRI, Jamshedpur, which is incidentally where both of us met and became very good friends for since 2010. Yeah, long time now, 14 years. And then the usual after MBA corporate stuff. So worked in different companies across different roles, etc. Uh, right through my corporate life, I think one bug that had bit me right from the time that I started was how do I gain autonomy for myself, right? Because just to give a little background about my family, so I come from a business family. My father has a small business that he used to run, now of also retired. But I have already always seen people in my family, my father, my uncles, all of them were businessmen, and hence they had the luxury of time to themselves, right? So they could do what they wanted when they wanted. Obviously it came with a lot of stress, lot of responsibility, not just for yourself but for employees and for a lot of other people that you are working
Yeah.
with, stakeholders. But the thing that has always stuck with me from growing up has been the autonomy, the kind of luxury of time, as I said.
Hmm.
That's the
Hmm.
most important thing that really has been my driving force, kind of in right from the start. And when I joined corporate, obviously I was doing what I was doing. uh, uh, Not, I would say I was yeah, average in what I was doing, but I was doing things conscientiously and diligently in the roles that I have been in.
Yeah.
However, that bug to be uh, always under the pump, in the sense that I am being dictated, my time is being dictated
Yeah.
um, from other sources, was something that always bothered me. And hence, right from the start, maybe in 2013, 2012, 2013, when I started, I was always for the in the search of some avenues which can at least in some way alleviate this pressure of being a 9 to 5 under the pump kind of a situation. So I think that is where my journey started with respect to financial independence, or the pursuit of financial independence. I
Yeah.
think that
Yeah.
is that's where it yeah, it started. But in general, from a background perspective, I am basically your average guy from Kolkata.
Yeah.
Very proud Kolkatan. It still resides in my heart. I'm staying
Yeah.
very far away at the moment,
Yeah.
but yes, miss the food, miss the vibe, miss the people, miss the language every day and every moment.
Yeah. So if I were to sort of draw some insights or inference from that, so obviously as middle class Bengali boys growing up in Calcutta, doing our education, we obviously realized we had to do something additional. So we went for our MBA. You went after
Yes.
your engineering. I went after my economics. We wanted to find suitable employment because everybody said, you do an MBA, you get a job. And we were lucky to join great organizations. We had great 2 years in XLRI Jamshedpur as well together. And then obviously we enter the corporate grind. But what I hear from you is that, while you did what you had to do, to earn a living, your heart was never fully in it because you were always craving for that control on your own time. On you be the master of your own time and finance and everything. So to get to that, and obviously your background shaped a lot of your aspirations or your mindset to go on stock market, started to do trading, right? That is obviously for many people a strict no go, right? Because it's very risky. People have lost their life's earnings, people have ruined themselves, and that's the typical narrative. Growing up in our kind of families, we've heard that, oh, stock market is very dangerous, right? So where did that risk taking thing come in, or was it just one of the things you were trying to reach a certain financial independence threshold? How did you go about it?
Yeah. So I think yeah. So when I started, and I started in 2012, as I said, maybe about 6 months into my job, I realized that I have to look for avenues
Hmm.
which are beyond corporate job to get fulfillment,
Yeah.
to get myself ahead financially, because also possibly because I was not really enjoy a corporate life. So that is one of the things.
Hmm.
And I started searching and trying to figure out where to kind of park my money, because ultimately I am doing a 8 to 10 hours per day thing to
Hmm.
earn a living, right? And that money has to work for myself. And when I was searching, I found that the only way we can achieve our financial goals is to make money work for ourselves, right?
Hmm. Sure.
You will not see the benefit of it when you start, but
Yeah.
compounding creates a wonderful journey, maybe 5 years, 10 years into the journey, right?
Yeah.
I was introduced to the idea of investment very early in my life. My father, being a businessman, he was very conscious of the idea of letting money work for itself,
Mm-hmm.
right? Although he was never in the stock market, he was a very risk averse investor on his own. But
Mm-hmm.
that really shaped, that had already shaped my mindset, the way I thought about money and finances, right? And at an early age, maybe when I was in my 8th standard or 10th standard, my
Wow.
father
Okay.
used to, for example, make me sign whatever, make me deposit, say, fixed deposits, NSC bonds, or some
Mm.
LIC bonds. Now I
Mm.
know with the knowledge that I have now, that those are crappy or very bad investments.
Yeah.
However, just the seeds that were planted, that
Yeah.
were
How to
were
handle
growing
money, managing money,
yes,
moving money around. Yeah.
yes, maybe in my 8th standard I started filling up some forms for my father so that he could deposit some fixed deposit, or etc., right? So just that at such a young age I was getting introduced to the idea of investment. What is it that he was doing, etc., that was
Mm.
always there in me. I was never really seriously trying to do anything. Obviously I had nothing to do with money at that point.
Yeah.
But when I started earning, I think the first things that I did was to ensure that my money was judiciously employed, in whatever avenue. And then
Yeah.
as I searched more, I obviously it was very clear, it was clear as day to me that the stock market and equities are the only way in which
Mm.
you can really beat inflation, you can beat all other forms of investment if you stick to it for a long period of time. There will be volatility and tumultuous times
Yeah.
in the stock market, but I think that was the only, so that was my realization, that uh, all other avenues fail when it comes to the stock market.
Yeah.
And obviously, because there is a logical reason to it, because stock market is betting on businesses, and the biggest and the richest people in the world are businessmen, right? So if they are making money, you make money. So that was the plain vanilla logic that I started with. uh, I don't know where the risk taking comes from. Maybe it's the background of being born in a business family, where I am a little more risk averse than usual, or than the average person. But yeah, with more knowledge, I think I educated myself in this domain. I really did not start trading early, because trading is
Yeah.
much riskier, requires a lot more. It requires a lot more psychological, temperamental
Yeah.
changes to yourself. But yeah, investments, I would say, is more relaxed. It is more. It's a better way to start,
It's
and
more
that's where
passive also. It's more passive. You do it and you sort of, keep it and you forget it as
you
long as,
fill it and
you
shut it. Yeah,
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 yeah, yeah.
yeah,
And you can keep your eye on it and on how things are progressing, and you can then, do an
yeah,
evaluation
yeah.
after once in a while. But yeah, it's passive income.
Yeah, yeah.
So
I think, sorry, just so with just one last point on this.
yeah, yeah, go ahead.
One, the risk taking thing that I talked, and also my background, how it shaped my risk
Yeah.
taking ability. Second is, I think, the intellectual stimulation, intellectual curiosity that you get out of
Mm,
direct
mm,
stock markets, right? So you read
mm.
about companies, you understand balance sheets, numbers, fraudulence that is going on in the stock market, right? So
Sure.
that gives, that at least for me, because even in college, etc., I was very finance oriented, so I did
Yeah.
well with numbers. And
Yeah.
somewhere that thing really stimulated my intellectual curiosity uh,
Yeah.
in the stock market. So it's like an ocean where no knowledge is enough. So I think that was another thing that was very interesting about the stock market for me.
Yeah, yeah. No, I think, and that also makes sense because even I remember when we were studying HR as our major specialization, you took finance as your electives, so you
Yes,
always
yes.
enjoyed that. And I think, not dissing on HR, but finance, accounting, all of that gave you a more kick and more intellectual stimulation,
Yeah,
that you got from that particular discipline, that particular area. So okay, 2012, 2013, you started, doing this investment. You realized the importance of investing early, being it in the long term game. Trading you started later.
yeah.
uh, with at what point did you sort of realize that, oh, maybe I can do this full time and I can leave my corporate job? Because for us, again, Bengali middle class, boys or girls, uh, quitting a job is a big deal. Retiring is another whole thing in itself, because you can take a quick break nowadays. You take sabbatical and all of that, but you never really consider
Yeah.
retiring as early as 34, 35. So at what point did you realize, oh, now I can actually do this full time and I can actually retire from my corporate job and get into this?
Yeah. So I think the way I thought about financial independence, and I did a lot of research a lot of study about it, not just in India, because in India this concept of financial independence is a very new concept, because obviously we are a developing economy. A lot
Hmm.
of the uh, one is the knowledge about financial independence does not exist.
Hmm.
Second is our social, and I'm not getting into very tirade on the social structure. Can you hear me, Subit? Sorry, I think the network had dropped
Yeah,
off a
you
little
just
bit.
froze for a second, but go ahead. Yeah.
Yeah. So I think somewhere the social security net, right, in India, for example, is not people are always a little insecure in terms of how much is enough, do you call it enough, right? So, and
Yeah.
also because a lot of us are possibly first or second generation really doing well financially kind of people.
Hmm.
We really always have that mindset that okay, I think nothing is enough, right? So
Sure.
uh, so that is one thought. But when I was researching what is it that we say enough, I think there were some studies that I saw from the US, for example, the Trinity study about financial independence, etc. And they give out some numbers in terms of how can you think of it, right? Because
Yeah.
ultimately, when you're what so the main objective is that when your portfolio or net worth, and we'll get into a discussion obviously on this later as well, becomes large enough that it works for you hard enough for you to not work any further. I think that is when you can say that you have reached financial independence.
Yeah.
It is not really a number because you really never stop working for your through your entire life. Once you stop working, you really will get rested, right? But
So
it is about
your
that
background
mental.
is very windy. There's a lot of wind in your
Is it
background.
better? Is it better?
Yeah, 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 it's okay.
I'm
I can
actually a
understand.
little bit on the outdoors, so
Yeah, yeah, I can understand. So, so here's
yeah.
what I want to get into. So you mentioned that there is a certain threshold that certain studies have given in terms of at what stage can you say you are financially independent truly. So you said that that is a US study. For Indian context, obviously that differs. So when did you realize that okay, I have almost hit this number through my investments, through my trading, and now I can call it my day from corporate. So, and at any point of time, bro, let me know if you want to share some slides and numbers for our
Yes.
audience who are probably watching it.
Yeah, yeah. I think it will be very helpful. I had made a couple of slides on this idea of financial independence. How should we look at it? Maybe we can pull
Yeah.
that slide out, Subit, while I
Yep.
speak.
Yes. I feel like I like my own Joe Rogan where I say that, let's pull up that slide or pull up this. Okay. So let's
Yeah,
go.
yeah.
So
Thank you.
and this will not be a lecture, but Datta will breeze through some of these slides that he's put together. And this is not in a sense gyan, but these are very practical advice that he has followed in his life and has helped him. So if you're taking notes, please do take notes. The video will be anyway available. So yeah, Datta, go ahead and I'll start flipping
Yeah.
slides.
Yeah, thank you. So so financial independence, as I was saying, from most studies done, there is a very the most popular study is called 4% rule. So basically what it means is that if you have enough net worth where where you are able to live off 4% of your net worth, then
Hmm.
in a year, then that will
Hmm.
pretty much last you for a lifetime. That has
Yeah.
been studied and back tested for 100 years in the US, for example. I think it's getting a little windy, but let's see. So that is something that I have that's something that really got me interested first. But then when I looked at India, obviously it's a very high inflation economy in India compared to what we have seen in the US, right? So I think to be a little bit more conservative from an Indian perspective, I think maybe a 3% rule, or a, yeah, I would follow a 2% rule, which means you achieve financial independence when you reach 50 times your annual expenses in terms of net worth. I think that's a good number to target. I know it
Yeah.
may sound very high, because that's a very high number that it looks like, but yeah, if you are
Yeah.
at it.
So just to simplify, so let's say if my annual expense is, let's say, 5 lakhs,
Yes.
for example, like
Yeah.
then I need to have how much as my corpus?
5 into 50, which is 2.5 crores as your liquid investable corpus.
Okay,
That
and
is,
we'll get into the liquidity part of it in a moment. And for people who are probably following the slides, FIRE stands for financial independence, retire early, and obviously then you can quit your corporate and you can do whatever you want. So Datta, let me know when you want to move to the next slide. Or
yeah,
yeah,
yeah.
perfect.
No, so yeah, so just I'll dwell a little bit on this aspect.
Yeah,
So see, the idea of financial independence is that it's not a one size fit all kind of a story, right? So it is,
sure.
everybody has a different story, everybody has a different motivation. No, not
Yeah,
everybody needs to be financial, everybody needs to be financially independent but not retire early,
yeah.
right? So we have to really distinguish between these two things. If you're really loving your job, and you are very passionate about what you're doing, for example, I think the retire early part you can just forget and concentrate on financial independence. It is, for me, it has been about the freedom of choosing what I love to do, what I like to do,
Hmm.
rather than being dictated what I should be doing at all points in time. I think that is financial independence for me. That's the essence of financial independence for me. There are two concepts I want to introduce. One is the fat fire and lean fire. So as I was telling you, the 4% rule means 25. If you have reached 25 times your annual expenses, you can pretty much, in the developed countries, say that you have achieved financial independence.
Hmm.
For India, I would say that you have achieved lean financial independence, which means you may not need to work full time in a 9 to 5 role, but you may
Hmm.
need some form of uh, active income, maybe freelancing or
Side
something.
hustle, as they call it.
Yes, yes. It may be just 10 or 20% of your actual income that you are earning, but just to act as a cushion, right?
Hmm.
And fat fire is when, for example, you reach, and these are rule of thumb. There is no rule to it. This is my thumb rule.
Yeah.
50 times your annual expenses, it's when you can see you have reached fat fire, which means you really do not need to work anymore, because your money would be doing enough. uh,
Hmm.
right? So, and there are many ways you can deploy the money, but I would.
Yeah, and here is what I would want to understand. So you said that my annual expense today, whatever it is, I multiplied by 50. That gives me my retirement corpus, fat fire, lean fire, whatever.
Yeah,
But obviously, I also know that my annual expenses will keep going up over a period of time for the next 5 years, 10 years, 20 years, 30 years.
of course. Yeah.
So does this rule of thumb actually capture that as well? My annual expenses growing at a rate of the inflation or other things that I might get into in my next stages of life?
Yes, it does. It does, because ultimately your net worth is also not a static number. It
Hmm.
will, because as I was mentioning, you will possibly, the suggested is, for example, you invest around say 60% in equities, right, and 40% in other instruments, and you can
Yeah.
mix it up with a little bit of real estate, little bit of fixed deposit, etc. Now that net worth itself should, with this composition, beat inflation, which means, for example, today, if you are spending 5 lakhs in a year, tomorrow with inflation of 7%, you will end up spending 5.5 lakh 35,000, right?
Hmm.
However, your net worth also would be, possibly in this composition, would go up by 10%. So you are actually
Hmm.
beating inflation, beating your personal inflation also,
Hmm.
right? However, the
Interesting.
point that you're, maybe one thing that will happen is you have a big lifestyle upgrade, right? So for example, today it's 5 lakhs, you go to a bigger house, bigger expenditure, you have a start a family, etc., and you become 10 lakhs in expenses, right? So
Hmm.
this one, uh, uh, maybe a fat fire will accommodate that situation also. Lean fire, for a
May
lean
not.
fire you will need to have some other active income coming in, so that you
Okay.
can do those lifestyle required changes, right?
Okay.
However, I
Okay.
think for most fire practitioners or people who really think actively about financial independence, you would see that most of them lifestyle
Hmm.
inflation is under control. Most of them like to keep the lifestyle inflation under control as much as
Yeah.
possible.
Yeah, I agree with you, and I know you do a great job at it. Even with your financial independence and retire early, you've not really started splurging
Yes.
on a house or a car or upgrading your lifestyle to an extent which you probably don't need, and you don't really feel
Yeah.
that material additional comfort is required.
Yeah.
For you,
Yeah.
you're happy with your own current lifestyle.
Yeah, see, it is all about your person, how you achieve that personal, you achieve peace and happiness with yourself and what you want out of life. What is
Yeah.
it that is not giving you that marginal utility beyond a point? Like if you spend 100 rupees, you are getting a lot of happiness. But is the next 50 rupees or 100 rupees giving you that additional double in marginal utility of happiness? If it is not, then I think that's the point you have to think about,
Okay.
because there is no
So
end
so
to
that
materialism actually.
So,
Yeah.
so Datta, let's go into your, practical tips for, young professionals, youngish professionals
Yes.
like us. What are your personal finance 101? And we can breeze through some of these slides.
Yeah. So I think from my experience, from what I have understood so far about personal finance, things that I have practiced, I think insurance is a must, right? Everybody, after taking care of their basic necessities of food and shelter, should go in for insurance. Two types: medical and life. Medical,
Hmm.
I think, is more important than life, because you will need a medical insurance for everybody in your family. I think that is in today's day and age, with and we have seen COVID and so many other things coming along, and
Yeah.
lifestyle issues medically. I think
Yeah.
medical insurance, the first basic necessity for everyone. uh, Even if you have a corporate job and have company insurance, go for a personal top up or a personal
Yeah.
insurance, medical insurance also, just in
Yeah.
case if you may
Fall
sometime
short.
have to change companies, fall short,
Yeah.
etc.
Yeah. Okay.
life Life insurance is when you have financial dependence. Basically, if you are actually people who have actually achieved fire, life insurance may not be required. However,
Hmm.
if you have dependents and you are working with an active income, you will need a life insurance. My thumb rule is around 15 times your annual CTC. For both of them, medical and life, I think lock in as early as possible. For young professionals, maybe in their 20s or 30s, I personally started my medical insurance in my 20s, my life insurance in my early 30s. So the earlier you go, the lesser the premium and the better it is for you to have a history of no claims, etc., so you get better deals and all of that. So I think that's something which is important. Do not mix, and this is one of the most problematic things that financially people do early in their career. They mix insurance and investments. So ULIP, LIC products, etc., these are just according to me, really junk products, because they are
Hmm.
not giving you the best of both worlds. They are giving you the worst of insurance and investments. So try to prioritize your insurance and investments. Let's future.
Yeah.
Right, so that's on insurance. Okay, let's go to the next one. The other important aspect is pay yourself first, and this is something which I learned from a very very basic but a very powerful book. I think that's the name of the book. So try to prioritize your own savings and investment first. So at least 20% of your monthly income should be saved and invested as early as possible in your career. I think that is something that we have to always keep in mind. Set aside a contingency fund for everybody, irrespective of financial independence, not financial independence, etc. I think a contingency fund is one of the most important things that you should keep 6 months at least. Keep it in cash and liquid funds, or FDs, etc., 50-50, so that you have access to it. You are not never falling short of an emergency, in an emergency situation. Uh, Sorry.
Now, this is a little bit too technical, but do you want to just give a summary of
Yeah.
uh, what this slide talks about? Yeah.
Yeah, so this slide is basically talking about the fact that, okay, now you have saved, you have protected yourself through an insurance, you have saved money through by going for financial uh, uh,
Hmm.
instruments, etc. But what is it that you achieve out of it, right? You would have done some sacrifices, etc., all of that during that
Yeah.
tenure, right? But what is it that you achieve out of it? So compounding is what takes care of your financial goals, right? So when you are
Yeah.
actually saving and investing, it is the Einstein said that compounding is the eighth wonder in the world, of the world.
Okay.
Uh, you basically are leveraging your capital and not your time when you are earning money from money. So
Yeah.
harness it, your youth, use your long runway to have compounding work for you.
Hmm.
Uh, Aggressive. So how do you allocate? So basically, the takeaway here is that if you want to allocate your capital, 100 minus your age for an aggressive investor should be a good allocation into equities, because
Hmm.
equities are volatile but
So
equities
if
are
if if
rewarding.
if you are 35, then you should invest 70,
100 minus 35,
65%,
65%.
65 to 70% in equities, and the rest is what, in like safe saving
Re-
instruments.
Rest is safe saving instrument. You can choose, you can do little bit of real estate if you have a bigger capital, or you
Yeah.
can do fixed deposits, fixed deposit, gold, etc.
Yeah. So Datta, one thing I would like to call out here, obviously these are thumb rules that you have built out of your own practical experience and by, reading research and other, studies. We are not endorsing or we are not
Yeah,
recommending that you do this. Please,
of
this is
course.
a conversation, a discussion between two friends who's achieved financial independence, retired early. He's sharing his tips. Uh, Please do not take this as recommendations or prescriptions to do this with your life. Please, as we say, read the terms and conditions, offer documents. Be very very careful about when you go about investing in stocks, in mutual funds, in other instruments as well. This is just Datta sharing his life story with numbers as he likes to do. Yeah, go ahead. Okay, I think Datta has frozen. Let me move to the
This is
next
basically
slide.
the way. Yeah.
Sorry, do you
Yeah,
want me to go back to
so
the previous slide?
no, I think let's stay here. So
Okay.
basically what I mean by this slide is, we need to diversify our portfolio but not over diversify, right? I
Hmm.
see a lot of I talk to investors who are, for example, completely in fixed deposits, who are
Hmm.
completely in equities, or who are in equities but have like 20 or 30 mutual funds, right? these are
Hmm.
these are things we should not do. So do not over diversify, do not make your portfolio look like a fish market.
Hmm.
Try to make some sense out of it, in terms of what is it that you are trying to do with your mutual fund investments, for example. And I would always suggest that young professionals starting in their career start with mutual funds. I myself started with mutual funds. If you want to go for equity portfolio, start with mutual funds, and because that is the plain vanilla, will give you inflation beating returns. And
Hmm.
then you, if you are interested, if you have the passion, you should then start researching and then getting into direct stock markets.
Okay.
So that is the main thing. And this is basically my last take, what I did in my 20s. I think that
Sure.
is something that people can take some inspiration if they want from. So
Sure.
save at least 25% of your salary, come what may, whether you have to pay a big rent or whatever. 25% of your salary is something you should be saving and investing. I think that is
At
the
least.
real
At
path.
least.
At least, yes.
Yeah.
The more, the better. But yeah,
Yeah.
at least that, I think that number everybody can, that is more achievable for everyone, I guess.
Sure.
Live with your parents, low rent, because I did not, because for most of my life I've been living outside my house. I think only
Yeah.
post covid a couple of years I was in Kolkata, but before that always outside. But I
Yeah.
think this is one of, rents are one of the most are one of the biggest expenditures that we do in our career early on in our 20s, etc. So so try to reduce that inflation in housing. Do not go beyond what you actually need, especially in your 20s, when you don't really have much of a family, you're not married, etc. You don't need a big house or a big thing or a luxurious thing, etc., right? Because that's an expenditure that's not coming back. Don't buy a house. I would, that's again my personal choice, because I am a very equity share market kind of a person.
Yeah.
So do not, a lot of people tie up after their first year of working, they go for a mortgage loan, tie up their money
Yeah.
in a house, right?
Yeah.
Houses in India give maybe 9 to 10% annual return, whereas equities historically have given 13 to 15% return. That is the plain simple logic. Do not tie up your house, it is illiquid. Tie up your money in a house, it is illiquid, difficult to maneuver if you need the money, etc. So that's one of the things that I would suggest. But I know invariably 90% of the people will go
Yeah,
ahead
I
and
think
buy a house.
there is a
Yeah,
psychological aspect to having your own house, and that's how we've seen typically our parents' generation or previous generation.
yeah,
Having your own house was their goal, right? That was when they made it, like when you have your own
yeah,
house. So I think
yeah,
there's a lot of psychological aspect to all that. What you're saying is, given young professionals how mobile they are, how uncertain their careers are, how global
yeah,
the economy has become with diversified, you can work out of anywhere, remote work, all of that. So investing in a house may not be the smartest thing that you want to do at this point of time. But yeah, again, this is Datta's, own personal take. So again, take it with a pinch of salt. All right.
yeah,
Next.
yeah. Take it as the pinch of salt, because obviously there are many people who have become seriously wealthy with real estate as well. Uh, but yeah, you have to choose for yourself. That this is my take. 6 month of an emergency fund, kept in FD or in cash. This is a must for everyone, because you never know what emergency really hits you. So I think that is very important for you to always keep in with yourself, and invest the rest in equity mutual fund, whatever equity portfolio you have decided for yourself. Keep it for the equity mutual fund kind of a portfolio setup there. So this is what I would suggest for people in their 20s. This is a slide where I wanted to just have a quick refresher for those who are inclined to actually go the direct stock market route, right? So if you have 5 years maybe into your career, you have done equity mutual funds, you now are getting the passion and the time to really research on yourself, etc. What is it that you should not do? So I always say, in the equity market, if you know what where you are not going to die, you will survive and thrive. But if you do not know that, then and I have these are rules that I have found or formed from burning my own fingers in the last 10-12 years. So I think this is some practical advice. So stay away from speculation. Do not get into frothy fear of missing out kind of trades in equity. Do not borrow to invest in equity. Do not take out loans to uh, invest in equity. Equity returns are lumpy, but in the long term, yeah, they will mirror, or they will go along with what the GDP returns are, what companies' profitability is, right? So in the short term there will be gyrations, but in the long term it will all smoothen out. And India historically has grown in a real GDP basis, has grown around 10 to 11%. So equity returns obviously will be more than 10-11%, because if you do in good companies, they will do more than those 11-12%, right?
Sure.
7% plus 5% inflation, etc. So definitely that, and start with mutual funds. That's the thing that I would suggest.
Okay.
Yeah. Next one, avoid the pitfalls for direct equity investors. Fear of missing out. Avoid fear of missing out. I know it is easier said than done. I have been guilty of falling prey to these things earlier. Bad management, and be happy with in wins and losses. So your this is a very psychological thing. So you should never be depressed when you face a big loss in the markets, because the markets are like that. They will give you happiness in wins, and they will give you sadness when you are losing. But if you are equanimous to both situations, if your
Hmm.
family does not know whether you have won or lost
Yeah.
money on in a month or in a year, then I think that is when you have shown signs of becoming a good investor and trader as well.
Yeah, yeah. Okay. So Datta, I'll let you complete the slides, and then I have a couple of questions which probably our
Yeah.
audience members also might be having. So I'll go to the last slide if you want to cover this version as well.
Yeah, last slide. This is again very hardcore for the real hardcore stock market investors. So this is my one of my favorite checklists. Again, no recommendation, no thumb of no real research, but this is my checklist which I use
Yeah.
to do stock selection. One of the favorite checklists that I have. So return on equity 10 years more than 15%, because the company must be generating at least 15% or more than their borrowings. Promoter holding greater than 50%. No pledged holding. Sales growth greater than 10%. Free cash flow 10 years should be positive. The company should be cash positive. Debt to equity less than 0.25. It means the company is not overly leveraged, and decent size company, so more than 250 crores, right? So this is what my personal checklist is. If some of the viewers would like to start their stock market journey, they may try to figuring out some good companies through this, and
Wonderful.
take a and
All right. So, Datta, when we were going through this, I said I have a few questions. Let's go into that. Can you hear me now? I think Saurav Datta has frozen.
yeah. Subit, can you hear me?
Yeah, I can hear you. So I had a few questions. So when you said, yes, equanimity is good, and avoiding FOMO is good, all of these things. But obviously, in the market, as you said, you burnt your fingers in multiple, investments where you lost money. A lot of in the recent times, a lot of young folks, and especially on social media, right? I'll talk about the influencers in a moment, but a lot of young folks have been sharing the news that equity markets are not for me. Futures and options are not for me. I have lost X amount of money, Y amount of money. Now I am almost in ruins. What have these people done wrong, right? Where did they go wrong? And when is it intelligent enough that your body and your mind tells you that, hey, you are going down the wrong path, dial back? What are those checks and balances that an individual can do? Because obviously getting 20, 30, 40, 50% returns on equity market is very lucrative, right? When you hear your friend buying a new car, new house, you're excited by that, and they tell you, oh, I have this tip, I have that tip. So how do young people not get caught up in that? And when do they dial back when they know they have, massively messed up, and they are putting themselves and their own families' future in at risk by playing this game?
Yeah. So I think in the equity markets, most of and you if you see a lot of those posts about people saying they have been ruined, they have lost lakhs of rupees and things. I think most of the losses are if people are doing derivatives, or people are basically going into leveraged products. So derivatives, I will not get too technical here, but if you are really doing cash investments, which is the I think should be the bread and butter for all stock market participants, which is their cash portfolio, which is where you're buying stocks with your own with just your cash, not leveraging, etc. I think that is where that is a more safer way, a safer way of doing it. If you are leveraging through derivatives, etc., I think that is something where people go bust, because the inherent nature of derivatives, derivative products, futures and options is that fact that it's a zero sum game. So someone will lose and someone will win, right? So that is how it works. And inevitably 99% of the people end up losing. This is not my data, this is SEBI's data, right? So 99% of the people end up losing, which means the 1% who win, they make disproportionate amount of money at the cost of the 99% people who are losing.
Yeah.
However, derivatives and trading are, it as you said, it's more of a FOMO trade. It's about
Hmm.
seeing someone else making money through tips, etc. You feel that you also can get it, and hence people just use it kind of a lottery or a slot machine to try their luck and end up losing everything to everything in the bargain. I think I would suggest stay away from derivatives at least for the first 5 years of your career. You don't really need to do derivatives to be financially independent and
Yeah.
become rich. You can basically just do mutual funds and become wealthy and financially independent. That
Makes
is
sense.
one thing. Unless you are very very sophisticated investor, you can give time and effort to learning these
Yeah.
things. You should not be into derivatives.
Yeah, and I think you should know, you should have enough self-awareness to know whether you are really that sophisticated or you are just a beginner in the market. Don't, put so much overconfidence in yourself without even
Yeah,
learning, the market, staying in it for a while. Don't start, vlogging from day one
yeah.
about how your P&L statement reads.
But Subhid,
Uh,
you know what? The sad part is that most people actually start their market journey, stock market journey, with derivatives and with short-term trading, intraday trading, and things like that.
yeah,
They
yeah,
actually do not follow the same path of coming through just cash investment, sitting it out, right? They actually start in the lure of quick money. These are the same
yeah,
people who would invest in fixed deposits, invest in a house and wait for a year to get 5%, 6% on their fixed deposit. But these same people, they would come in the stock market with the expectation that they would make 5 times the money in 6 months. That is where the main problem is.
yeah,
You
yeah.
think stock
Agree.
market is a lottery or a game of, I don't know, slot machine.
Yeah, so it's definitely not quick money. It's a game of patience, and you have to be very very, what should I say? As you rightly said, balanced, right? You don't
Yeah,
get swayed by wins. You don't get demoralized by losses. You have to have a very,
yeah,
level head on your shoulders to survive and thrive here. So, which brings me to our next segment, and I want to, pick your brains. You started, doing full time investment and trading. You also have your wonderful YouTube channel where you're sharing these practical tips that you shared and many other things as well on stock market trading, wealth management, financial independence. And you have a great following that you built on X and Twitter as well. There has been a rise in the last few years, right? And especially probably with the India's bull market continuing for the last few years and foreseeable few more years at least. It has led to this whole uh, group of financial influencers, or we call them finfluencers, people without any background, people who are, I mean, some of them sure have the experience, but a lot of people have come into this place just, I don't know how much money they make, but to create content. They are content creators, right? And
yeah,
they think that giving people that carrot of, oh, you can make money, you can become rich, is a very easy way to get your audience, build an audience, become a content creator, and then you go into other sort of collaborations and promotions of other
yeah,
events and other stuff. You don't really, trading is not really your main, focus. So
yeah.
you being in that same domain, and you share space with these other players as well, what is your candid take on the rise of influencers and these, YouTube channels and Twitter handles, where people are doling out advice? Invest in this stock, you will get X returns. Invest in that stock, you will get Y returns. What's your take on all of this?
Yeah. So I think Subed, I think this, as you very rightly mentioned, this is a pure bull market phenomena. The next bear market comes, and 90% of these influencers and these Twitter handles will just disappear. I think this
This is
is,
when the low tide happens and you know who's swimming naked. Yeah.
Who's swimming naked? That is right, that's right. And I was actually reading up on with some of these handles, etc. And inevitably I get blocked in a lot of these handles because I try to talk sense there. But the point is that most of these influencers would have come into the market, 90% of them, after 2020. So after the bull market in India started, 2 3 years in the business, and they think that they know it all. I think more than know it all, I think they are basically pure content creators, which means they are not really doing what they are saying, but they want to lure an audience, build up an audience, because ultimate, and then sell courses. And you would see in the last 6 months, 1 year, you would have seen so many of influencers who have been selling courses worth crores.
Yeah.
And it's mind boggling the amount of money people are making selling
Yeah,
financial
I think it's a great strategy. It's a great social media influencer strategy, right? You come, you create a YouTube channel, you start giving tips, you show some graphs and charts and
issue. Yeah,
bars, you
yeah,
start sharing your screenshots. Then very soon you're selling courses. Very soon you're promoting cryptocurrencies and
yeah,
Bitcoin trading platforms. Then very soon you also have written a book. And
yeah.
then very soon you are a TEDx speaker. So this is a very streamlined
And
plan for social media influencers to crack this game, and it's very evident. The pattern is there.
it's working. You can't blame them if the market is lapping it up. You really can't blame anyone, right, for doing it. But the only thing is that the problem I see is that you see, I have no problem with people who are sharing actual serious gyan, etc. Right? But those people who are sharing influencing gyan are the ones who are actually making like crores of losses. So whatever they're earning in their training
Offset.
courses,
It's offsetting there.
they're offsetting through their trading losses. I think
Yeah.
it's just mind boggling. I cannot wrap my head around it, right? So I don't know. It's obviously a bull market phenomena. The next 3 4 years, whenever the bull market ends, you will see this entire industry dying down. All of this business will shut.
Yeah, no,
Influencers will not
they'll
be in
start
vogue
influencing
anymore.
on something else. They'll pick
Yeah,
another thing
from influencers they'll become, I don't know,
health
style
influencers, yeah, yeah,
influencers, health
mindfulness
influencers.
influencers. Because once you've made so much
True.
money, you don't want anything else. You want to go higher up in the Maslow's hierarchy. So you want
Yeah.
peace of mind. You've self-actualized, and then you'll see a lot of these, mental health and mindfulness
Yeah, yeah.
influences coming in
True.
once the tide runs out.
And these guys have obviously cracked the code of social media influencing, so they can now just replicate their successful influencing venture into any other venture, maybe a
Absolutely,
cookery venture for all you know.
it's a great playbook that
Yeah,
wannabe influencers. I mean, though I believe influencers are wannabe, but even wannabe influencers can learn from, because the playbook
yeah,
is very well written now. So
yeah.
that
And that is
and then
where
obviously,
I
hmm,
yeah, that
go
is
ahead,
where
go
I
ahead.
kind of I have been in Twitter for quite some time, maybe 6 8 months or something, just following, seeing, and it was like really revolting to see the kind of junk being spewed by
Yeah,
influencers all across. So I started writing a little bit about my thoughts, because most of you, if you would have seen, my thoughts are quite radical and contrary to what people are saying in
sure.
general. And I wanted to just speak my mind, what I think,
Yeah,
etc.
yeah,
And
absolutely.
yeah, that's how
So
it
Datta,
all
so
happens.
lest people accuse you of living in glass houses. Are you also planning to create a course and sell it, or are you becoming an advisor where you're selling your advisory services? What is your plan?
Well, I don't know how it goes. See, definitely I post what I want, what I think. I think that the uh, the sanity I would want to keep in my in the way I view social media. However, possibly, I don't know, because I have to and I see a lot of people actually who are interested in fundamental analysis, fundamental research, etc. So I'll have to see what the future holds from that aspect. But I
Hmm.
definitely not a course per se.
Hmm.
that I would want to do. But let's see how what it does. But definitely not something which is recommending breakout stocks and 10 stocks to get rich kind of
Sure. Okay.
situation.
So
Let's
so
see
so
how
which brings me to probably our penultimate or last segment. We'll see how that we do on time.
how it goes. If I
Um,
am in the social media sphere, if it will not be a money making thing, as in not a serious money making, because obviously my money is through my trading.
yeah.
But let's see how it goes.
Yeah. So which
I'm not sure at the moment is what
yeah. So which brings me neatly along to our
I
probably the
can say.
last segment, which
Yes,
is something that happened very recently, as early as recent as like couple of weeks ago. And I want to bring that stuff out as well. So you have been writing on Twitter for the last, I don't know, 8 9 months,
couple
and
of
you've been
months.
sharing,
Yeah.
yeah, and you've been sharing your views, your candid views, and you were building a following organically with
Yes.
the people who've been finding sense and sanity in your tweets, and then you made a tweet which went viral, and probably most of if you search Sourav Dutta trader or Sourav Dutta investor on Google, article links start popping up, so you're getting that 15 minutes of fame. This tweet, and I'm gonna try to share this tweet. Let's see. I've seen this, read about it. Let's see if you can see this. So this is the tweet the infamous tweet now.
Yeah.
Uh, uh, so I want you to unpack this tweet. The motivation behind writing it. I know it was not really intended to be something viral or provocative. You had something on your mind, but please feel free to unpack the tweet. Then the reaction to the tweet. Let's hear from you.
Yeah. So it was, so I obviously did not have I had not predicted that this would go as viral as it did. It was just me writing my thoughts about wealth, right? How people perceive wealth, what people see as being rich versus what the reality is in today's life, right? And this is, I kind of thought of structuring how we see wealth, because we see so many classifications of people in terms of poverty, rich, wealthy, etc., right? So I wanted to bring some a new perspective of how I look at net worth, because you would have seen in what I spoke so far, the personal net worth is one of the biggest pillars.
There's a lot of
Yeah.
wind. Just give it
Yeah.
a second. Huh, go ahead.
Yes, it should be better now. There is a lot of I give a lot of weightage to the personal net worth of individuals, because ultimately that is the fulcrum on which your life will revolve if you want financial independence. So I kind of try to see if we can make some classifications. So I did this classification, and I obviously received a lot of brickbats. Some people also supported, saying that yeah, this is the reality of today's life. But I think somewhere people were agitated by the fact that these are too high to be really true for a country like India, right? That's what the major criticism of this was. The fact that I have had a privileged whatever working life or whatever to have achieved this, that I can say this. But if you think of it, right, and the way I think of it, uh, say 1 crore, right? And I say a middle class is say 1 crore rupees in net worth, right? The my perspective to this is that, if for example, if any medical emergency, in any kind of emergency that hits your life, and you don't know what, when and what um, an emergency hits your life, uh, this money is nothing. You will possibly end up spending this in a month of some serious emergency that comes in your life. Secondly, I see a lot of this credit fueled artificial feeling of wealthy that people have. Right. By that I mean, for example, somebody has bought a 1 crore, 2 crore house with 90% in mortgage. Right. And so basically, what you're telling me is that you cannot afford a decent living in a decent society with money that you have, and you call yourself middle class. I think that's not middle class for me, for sure. As a
Yeah.
middle class person, by definition you should be able to have decent living, decent shelter, decent uh, basic food, travel, those kind of situations being sorted for yourself, right? Only then can you call yourself middle class. And in India, in any society, even for example in Kolkata, if you want to buy a flat in any regular society, 1 crore is bare minimum. 1.5 crores, 2 crores, these are just easy numbers that you reach,
Yeah.
right? So I
Yeah.
think that is from where that is the
So,
perspective I come from.
yeah. So thanks for sharing, what was the motivation behind the numbers. Obviously, uh, and I have had to defend. I mean, I'm sure you had to defend yourself, but by virtue of association, I've had to defend this tweet also on many places, in many places, where people said that, hey, there is no scientific study done, there is no research done. I said, obviously, it's not. There's no scientific backing or any research done. It's completely anecdotal from his
Yeah,
experience.
yeah,
He has experienced his financial independence. He knows how much money for a typical middle class guy or girl needs to have in order to have a certain assured future and stress free life. I think the main reaction or criticism to it was two parts, right? And I know one part of it. I'll come to it second. First part was that people who in their minds thought they were rich or upper middle class, suddenly looking at these numbers, they found themselves in lower middle class or middle class,
yeah,
respectively, and that is a big shock to them. And again, this is not the reality of the world, right? This is your personal view about what
yeah,
you believe is that, and you could be dead wrong as well. So there's no
yeah,
challenging that. But I think the criticism and the reaction that it evoked from people was because, oh, I thought I was rich. Now you're telling me I am middle class or lower middle class. WTF, right? So I think that was that. If the numbers had been such that a poor person starts feeling that, oh, am I rich in this society or in Datta's rubric, then you would get a lot of more love and bouquets instead of brickbats. So that was one. The second part of the tweet, which I think a lot of people said, oh, maybe he shouldn't have done this. Oh, why did he do that? A few of our close friends
yeah.
also
I
let
know,
us
I
know
know.
that.
Yeah,
So on this one is what it was, and I know the reason behind it is once you write that, okay, this is my classification, and then you go back and write, I am an HNI, what about
yeah,
you? That
yeah.
last statement, a lot of people
I
interpret
think
it as,
that
oh,
ruffled a lot of feathers. Yeah,
oh, this guy is showing off. Who the
yeah,
hell is this guy that he's showing off? He's an HNI and calling me middle class. So I know, and maybe if I'm wrong in understanding you as a person, because you never know a person, 14 years, what time, but I felt that you went and edited the tweet and put that second line because people said, hey, who the hell are you to make these statements? What is your net worth? So you had to say, hey, I am saying this according to this classification, I fall here. You could have been very well in any of the other brackets as well. But in your own rubric, if you evaluate yourself, you fall in this category and you mentioned that. But since you fall in HNI, that ruffled a lot of people saying that, oh, acha, now this guy's showing off as well, calling me middle class and calling himself HNI. Who the hell is this? So if you want to
yeah.
unpack that, did I get it right or was there something else to it?
Yeah, see, I really, I actually I did not add it or edit it with that perspective. Uh, my my theory is that in India, for example, with a lot of, and I would get into a little bit of political commentary, with all the socialistic mindset that we have been uh, bred and taught so far, I think
Yeah.
the the somewhere I feel that the talking about wealth has become a
Taboo.
bad thing, so to say.
Taboo.
It's
Yeah, it's a
become a
taboo.
taboo, right? Like anybody who talks about wealth is seen as either a show off or somebody who doesn't adhere to the Indian standards and things like that, right? um, for me, if obviously we know each other personally, and we have talked about it, I think personally I am being an HNI, being a middle class, being a lower middle class does not really matter to me as a person, as long as I have my basic needs covered, as long as I have my financial independence. I can very well be in any of the lower categories, but as long as I have my basic needs that give me happiness covered, and I don't I have my financial independence, I'm good with it, and I would very proudly say that I am in this lower category, right? Like for
Hmm.
example, I proudly say to everyone that I have been not a very good uh, professional in my professional career. I think I have been average, and I see
Yeah.
a lot of my peers have been above average, exceptional, doing
Sure.
very well, right? And I'm very proud of that. But that's
Hmm.
not a game that I am racing with them, right? Because that's
Sure.
not giving me happiness. This is where I find happiness, and this is where I am proud to say that I have done it on my, it's not the number per se, but it's the process, and it's the way that I have reached there. And that's where I think it should be as a, people should take it more as an inspiration, that if a normal regular person with no knowledge, with average IQ can achieve financial independence, then everyone can. I think that's my drive, that's my motivator, right?
Yeah.
And that is where I come in from. I think
And
maybe I would have written it just for the sake of disclosure, not for the
yeah,
sake of showing off. For example, if I would have fallen into any of the other categories, I would have written that possibly as well.
sure.
uh,
I'm
and
sure you
and
would have.
for me as an for me to inspire myself to rise the ladder, right?
Yeah.
So that is the main
and
thing.
I and I was
And
and I was reading the comments on the tweet as well, right? And whenever somebody said, "Oh, I am feeling I'm disappointed because I'm in class A or class B or class C," your response was not to discourage them or fight with them. Your response was, "We are on a journey. You will get there. Keep working
yeah,
at it. You will get to financial independence." So your intent has, at least on paper, again, I don't want to read into your mind, but your intent has been to tell people that, hey, if I can do this, you can do it too. So
of course.
believe in it. Keep on the journey. Don't get discouraged. Keep aspiring for it. Keep trying for it, and you will get there, as per your means and as per your appetite for taking risks and investing. So I think that was a very good thing, where you did not start shutting down people or blocking people. You engaged with them, and I know it took a lot of
Yeah.
out of your peace of mind, in a way, to engage with so many thousands of people on Twitter, answering their questions patiently when you were getting brickbats or you were getting abused a lot. But with the abuses came also a lot of attention. Some popular media outlets and newspapers uh, wrote about this particular thing. What has been your reaction to it, and especially your family and friends, when the news sort of blew up, that an investor uh, has said XYZ, and now it has started a heated debate, and some influencers also talking about it on their channels and on their whatever social media platforms. So, what was that reaction for you as well as for your family and friends?
Yeah. So I yeah. So obviously I had not. Can you hear me, Sudhir?
Go ahead. Go ahead.
Yeah. Okay. Yeah. Yeah. So yeah. Obviously, I had not budgeted to so much of attention with such with an innocuous yeah, I got a lot of messages from people that I have known, acquaintances, friends from the past, who would have not spoken to much in the immediate past. But yeah, they would message me saying, "Hey, how are you doing?" And yeah, what is this? And things like that. So I think that was good, a good way of connecting with old friends and old acquaintances. But yeah, I my general reaction has been just to engage with people logically, with what they have to think. Obviously, I may be completely off the track. I may have not
Sure.
done something right by writing this
Sure.
or whatever. But yeah, at least engaging with people, trying to understand their perspective, giving them my perspective, and if we disagree, and move on. That has been my reaction.
Very
I
nice.
think too much of
Um,
I too much of attention has happened, so I had gone a little low key after this entire incident blew up. Yeah, and then life moves on. I think
Yeah.
that's been my plan.
One I think aspect that people brought up was, "पैसा ही सब कुछ नहीं होता, bro. Why are you classifying our entire existence on these arbitrary brackets? there is so much more to life. There is family, there is friends, there is meaning, there is purpose. But what about all of those? So what's your response to people who've been saying, that?
No, no, it is true. It is true. And I personally myself am an advocate to that. I am an
Hmm.
advocate. I have been an advocate that पैसा ही सब कुछ नहीं होता, but पैसे से तुम you can actually do what you love and like doing, right? For me, that has been what I have been advocating forever. For me, family, spending time with family, with traveling. I have been actually traveling quite a bit in the last few months, etc. Those are something I like doing, and I get I'm lucky to have gotten the opportunity to do those things. I think that is important. Everybody has a different driver, actually, I would say that. And
Yeah,
in my tweet, in my post also, I have not really classified people in terms of their happiness index, right? I have
sure.
just classified people in terms of the e- bare basic number, economical standing, as per the
Yeah,
current rate of and cost of living in India. That's the basic
yeah,
thing I have done. So this entire commentary about whether happiness and money, whether they can be equated, etc., doesn't come into the picture, at least in this conversation.
yeah,
Is what my response has been. But I do agree, पैसा ही सब कुछ नहीं होता. I have been the biggest advocate. I think there has to be a happiness index also. Maybe someday I will write about that as well. But yeah, that's
yeah.
for
We'd love to.
something.
I think that's how do I say it? There is a strong consistency in your approach, right? From loving finance to aspiring for financial independence to getting into investment and trading to quitting your job for financial independence, then coming on the platforms to share about the journey to financial independence, and then it blowing up on Twitter and news. It's all connected with one thread. So there is I don't see an inconsistency in
Yeah,
the life that you've lived so far and what you have been telling people about. So there
yeah,
is a strong degree of consistency in that, so which I appreciate. I can't say that, oh, you're being hypocritical about things, right? If you're doing a 9 to 5 job still and you're talking about financial independence, I would call you out. Uh, or if you when you say that, you need to watch your level of expenses, your standard of living. Had you been a
and
flashy
living
guy,
extravagant. Yeah,
wearing $1,000 shirt and taking the business class flight and Instagramming all the way, I would start calling you out, saying, "Hey, but you said manage your expenses. What about those tips? How are you living your life?" So I do sense a degree of consistency, and I appreciate that as well, both from this interview or discussion as well as a friend, because I would say never change.
yeah.
There's one question from a friend of ours who says, and probably you've answered this, but if you can see this question on your screen from Abhimanyu. Uh,
Halal ka.
yeah, so he says, lower middle class से
Yeah,
MNI सिर्फ MF करने से बनेंगे क्या? Expected time कितना होगा? So what's your
definitely banoge. Definitely
but
you
through
can
through
reach.
just mutual funds is
Yes, yes, yes. But you have to
okay?
be aggressively equity oriented in mutual funds. I think
Hmm.
that would be my advice for anybody. I'm assuming Abhimanyu is young, in his
Our
30s.
age, he's
Yeah,
our
yeah,
age.
our age. So yeah, definitely in the next. See, ultimately the way to look at it is keep the math simple. Equity mutual fund should give 13 to 15% annual returns. So keep doing your SIPs over a period of time. And according to the rule of 72, for example, you should be doubling your money every 5 years. So
Hmm.
that is about, I don't know, in 15 years, you get 8 to 10x your money, right? So if you start
Hmm.
with, say, 50 lakhs, you become 5 crores already in 15 years with the money that you started. Plus,
Hmm.
you have obviously added a lot of money with SIPs in those 15 years. So you will definitely be reaching way beyond your
Wow.
expectations by that time.
Wow.
So 15
Datta,
years, Abhimanyu, and maybe by the
yeah.
age of 50, yeah, you'll have a huge corpus.
Amazing. So I think that answers Abhimanyu's question. Datta, we've overshot a bit, and it's
Yes.
been a wonderful, lesson from you on financial independence and managing stock market, wealth, all of that. One last question before I let you go and enjoy the rest of your Sunday is, you are currently, for personal reasons, you are based in Netherlands, Holland. Uh, what is your take on Kolkata, and what are your plans? Do you have plans to come back? And what is your degree of optimism, pessimism? If you want to get political, I will not stop you. But what is your degree of optimism, pessimism with regards to Calcutta, and your, again, consistency and alignment with that city?
So Kolkata for me is my is love. It is not. It's not a city. It's some. It's a part of my heart. A place where I have grown up with. Just the friends, the people, the language, the food. Just traveling around. The hustle and bustle. Everything is something that strikes a chord with me. Definitely, I will be coming back. Fingers crossed, because obviously now the decision is not only mine, it has to be a joint decision. But yeah, we'll be coming back for sure. Kolkata will be a base for me. Hopefully, again, not a joint decision, but yeah,
Mm.
if left to me, I would be settling down in Kolkata, enjoying the rest of my life there, chilling out, and yeah, just in general enjoying. Kolkata, according to me, Kolkata has some of the best brains in India. Kolkata has some of the uh, cheapest cost of living. Being a financially oriented person, yeah, cost of living is very good. I see some optimism growing in terms of the business environment, the job environment, and things like that in Kolkata. But I think uh, having lived in cities like Bangalore, in Gurgaon, etc., I think Kolkata has a lot of, as in, truth be told, Kolkata has a lot
Yeah,
of catching up to do.
yeah,
There is a lot of improvement required in terms of the business ethics, the business environment, the government really stepping up their game to
yeah,
get the investments in. I think
yeah,
all of these other states, Karnataka, Tamil Nadu, Mumbai, Delhi, these are more vibrant in terms of their business ecosystem. And once you
yeah,
have a business ecosystem, you get talent in, you get people living, the infrastructure improves, all of that, right? I think Kolkata is has fallen behind over the last few decades, and there is a lot of catching up to do. Hopefully, someday we will get at par and even better, and then we will all be proud to say our Kolkata is the best place to not just live,
yeah,
but to work and thrive in our careers.
yeah, yeah. Um, Thank you, Saurav. This has been a wonderful Sunday. I mean, it was like, we haven't spoken in a while, but
Yeah,
this was great catching up, and I hope our listeners and viewers, you have a great following on Twitter and YouTube as well. Hope our listeners and viewers enjoyed this conversation. uh, Something to think about, something to learn. And again, we just want to reiterate, these are not prescriptions, these are not recommendations. These are just discussion points. Use your own intelligence, use research, find more information, and then make your decisions about life and finances accordingly. Don't take it as a prescription, but we give you something to think about. Sort of, thank you so much for taking time out on a Sunday. Really, really appreciate whatever you've shared. And from the entire Kolkata Calling community, we want to thank you for sharing your life experience and your journey with us. And personally, I would say, stay the same, never change. You are a fantastic individual and human being, and I am very happy to be in your corner to defend you whenever you get breakbacks. But also wish you many, many, I would say, successes in the journey that you're on. I know it's a tricky and risky
yeah,
world that you stepped in, but touch wood, may you continue to do and prosper there. And would love to see more of you in the days to come on different platforms, different media. I know you want to keep a low profile, but I mean, let your work speak for you. With that,
Yep.
if you have any closing thoughts, sort of, we'll do that and then we'll end the stream.
Yeah. No, I think Subid, wonderful catching up after a long time. It was a very candid conversation. Most of it I have given my the peace of mind and the way I see the world around me. Uh, mm, People should do their own research, to should learn and study and then take any steps, because we talked a lot about finance, so nothing to be done by anyone on the basis of just what we spoke. I think that's a caveat. And yeah, I think everybody have a great Sunday, enjoy, relax, and get back to work tomorrow.
Even you have to do that, but on a different field. Uh,
Yeah,
Amazing. Sort of.
yeah,
Thank you so much. Have a great
yeah.
Sunday. Enjoy and take care, man.
Thank you, man. Have a good day. Yeah, bye.